it's not too much if you say it fast. 60 million. So he said it about twice, and I knew I had a good buyer.
So episode 40, it's a big episode, buddy. Episode 40 of the Deal Ranch podcast. Legendary appraiser, legendary developer, and legendary many things down here in Myrtle Beach. A lot of guys that we've had on the show, a lot of guys that we haven't had on the show. Really wanted to hear your story, so thanks for coming on the show. I'm excited to chat with you.
Thank you.
I'll let you kind of pick where we want to start overall, but can you start with an overview, just kind of description of what EF Hucks is, and then Hucks Curry Advisors. And I think just knowing the company and your role here as president will give us a good place to start. And then we can go probably back in time a little bit here and hear some stories.
Okay. Well, the appraisal business is what I sought to have my full-time profession, and started that in the early 1980s. And today, on an annual basis, we do about 1,000 appraisal reports, and about, as far as volume goes, about 70% of that is residential assignments and 30% is commercial. But as far as income, it's the opposite. Commercial is about 70% of the income, residential is about 30%. But anyway, there's about 8 or 9 of us that focus on the appraisal business, and that is, Myrtle Beach is primarily a residential market.
Right.
There's certainly a strong commercial segment, but we aren't like the Atlantas and Charlottes with the big commercial
downtown
developments. Yeah. So, but we're becoming more like that. So it's becoming a full service type appraisal with all property types, from subdivisions again to offices to warehouses to hotels to shopping centers, and obviously condominiums. Since my career here at the beach in the early 90s, I probably appraised 70 to 80% of all the high rises that have been built since that time. So that became an important part of our business, but that business dropped off after the
right.
05 and 06 correction in the market.
So Dave had listened to the show and actually made the introduction to us. And we sat down a couple weeks ago, and I think kind of started your story from an earlier phase than that. And you could tell me where you want to start it at, but one thing I found interesting in your career, I think you started down here doing, were they loan workouts or troubled asset deals? Like during the savings and loan crisis, it seemed like a ton of volume you did. So if you want to start there through that, if that was your first kind of real estate job, and then how you started the appraisal business.
No, the appraisal business started when I moved from inland about 100 miles. When I finished college at Francis Marion, I knew what I wanted to do. And so I went back to my small town called Bishopville, home of the famous Lizard Man, and he was actually a friend of mine. But anyway, stayed there for 4 years and wasn't doing the appraisal volume that I needed to advance into the Appraisal Institute, which offers the MAI designation. So that was my long-term goal. So I needed to move to the beach. So I did. I came to the beach and worked for a brief time with an independent appraiser. And then I went to work for a bank or a savings and loan with one of their appraisal subsidiaries for about 5 years. And then started my own business in 91. And so from 91 through the early 2000s, 2001, 2002, all I had was EF Hucks and Associates. Well, then as people started asking for more consulting advice, I formed another company called EF Hucks Consulting, which started tracking data and doing consulting work on an assignment basis, unlike the appraisal business. And then most recently, Dave Curry and I spun off into another Hucks Curry Advisors, and that will be the consulting business that carries on for some time.
It'll be good to dive into those as well, but focusing on maybe early days in the 90s. So you start the business. What attracted you to the appraisal world as a whole?
It's what I always wanted to do since the time I was 15 years old.
Wow.
My dad actually worked for the Department of Agriculture with the Farmers Home Administration, and they made loans to farmers and rural housing. And so he did internal appraisals and did a little bit of outside work, but that's just the career path I wanted to go. I got my real estate broker's license when I was in college in the late 70s. And up until the early 90s, you didn't have to have an appraiser's license. And so the only way you got recognition of knowing what you were doing was through voluntary designations. So the MAI was and still is the highest you can get. And so that was my ultimate goal.
Wow.
So I accomplished that in 1991.
So what were the early days of the business like? So you moved from out of town, so it's a new place to you. And at that time, was it only residential appraisals there? And then how did you begin to scale it? Like, were there other guys in town that had pretty established appraisal businesses? Or what was supply and demand like at that time for appraisals and transactions too?
I moved in 84.
Okay.
And if my memory is right, when you went through the phone book back then, there were only 12 appraisers. And there was one MAI, his name was Jim Call, and he had actually stopped doing appraisals and was involved in a company called Leonard, Call, and Taylor, who became a development company, or at least a marketing company. Roger Grigg worked with them, Don Leonard, and then George Taylor, and then Jim Call was the MAI. So, but the appraisal field was kind of open for higher credentials, and so that's what I pursued and became had a significant market share back in those days through the 90s and up into the early 2000s.
What separated appraisers, right? So if you buy a home, you go, your bank's going to order one and essentially kind of compare, see what the property's worth against everything else. Like, what made your product more competitive, or how do you think what was important to you?
I would like to say it was credentials, and also experience and knowledge, and then all that changed when the federal government got involved and started mandating licensing. And they actually wrote in the law that you couldn't be prejudiced over someone's designations. That should not be a factor in deciding to send the work to them. So it basically unleveled the field, if you will. And so now people go get their CG license, which is certified general.
Wow.
And in the eyes of the public, that's just as good as an MAI, which it's nowhere near the educational requirements. But that's the way it is today.
What complexities did that introduce when that happened, do you think, to your business? Like the legislation, did it redistribute demand and like made everything just kind of more competitive?
Yeah, for sure. For sure. And then in the, I'm going to say 2008, 2010, the federal government put their hand in the business again and started saying that you have to have an arm's length relationship between the appraiser and the lender. And so appraisal management companies became created. And so banks decided, hey, I'm going to let this management company order all the appraisals for us and review them and dot all the I's, if you will. And those management companies became low price and quick turnaround time.
Wow.
And so there are still banks that look for good quality reports, but they can be easily disguised these days with all the data that is available.
Mm. How did your business start to evolve from just residential to then commercial assets? And you've worked on or like you said, almost all of the large sky rises and condo deals. So how did the business start to evolve through that period, leaving the 90s and then working on these larger deals and continuing to grow from there?
Yeah, I always had an interest in doing a little bit of everything, but you kind of needed to specialize. And so for a while I stayed away from golf courses. For a while I stayed away from apartments and really focused on the condominiums because I had the residential background that ultimately a condominium is a bunch of residential units. But as a bundle, it's another entity. But anyway, it just fit to start doing that. And then subdivisions came along. And so I had a complementary business to focus on residential type properties, but more complex commercial assignments.
When we met, you kind of walked me through a bunch of the data, and I won't obviously speak about it because I think you guys are offering it or selling it on the website right now. But you capture all of this data, as any appraiser would capture some of it. But for you, it seemed important to track all of your own deeds and mortgages from the courthouse. So at what point did you want to start doing that, and what made that so important, knowing it's a labor-intensive cost that you have to add on to the business?
Yeah, and I skirted from that a while ago, but you mentioned RTC. So when I opened up my business, it was a lot of local banks and regional banks, and then came along the RTC days,
right,
which was liquidating assets or loans and properties from banks. And so while I had a lot of appraisal demand, I also had investors ask me would I like to be involved in a group that bought and sold mortgages. So we got into that for a couple of years, and assets and loans that you could buy for 20 or 30% discount quickly became worth 100% because the market rebounded real quick.
Wow.
So I wanted to be prepared the next time there was a slowdown to be able to see the recovery taking place and or the decline. Yeah. And so I started tracking data to do that. And so after 30 years, you start putting all these correlations together. The data starts showing a pretty predictable pattern in the market. And so that's what we've tried to focus on by spending hours and hours assembling that data and trying to forecast the future trends.
Right.
From a little bit selfish standpoint, to be a wise investor, because I think any investor will tell you that timing is everything. And there's a time to buy and a time to sell. And as the old saying goes, you make your money when you buy, not when you sell.
That's right. So do you think your exposure to all of the data almost kind of enabled the evolution for you to go from purely just being an appraisal business to then being obviously an investor and developer, but then also this consulting arm. So I think that's a good segue. At what point did you start? I know we chatted about a deal that you developed. If you want to talk about that, we can. How did the business and when did the business start to evolve beyond just doing appraisals and getting into this consulting component? And then, or if you wanted to start with the investment days personally too.
Well, the investment days started when I was even in my small town at age 22 and 23 years old. I built a little 7-lot subdivision, actually moved a duplex that I paid $1,500 for and set it up on a lot and put 2 tenants in it shortly after I renovated it, and took out a 10-year loan at 14% interest on the first mortgage and 9% on the second mortgage, had 2 tenants in there and paid it off in 10 years.
Wow.
So that was my first investment. But then when I came to the beach, I had a young family, and starting out, I kind of sat dormant for a little while, but bought and sold a few little residential properties, but really didn't start with any significant risk taking, if you will, because that's really what it all is, until the early 90s to late 90s, and really just purchased a lot of land in the path of progress. And that really doesn't take a lot of expertise. It just takes guts and cash flow to be able to handle it until the market was at least profitable enough to harvest asset. And kind of like I was partners with a 90-year-old guy that had moved down here with $300 and, became very, very wealthy. And he told me one time, he said, "Buddy, the only damn mistake I've ever made with real estate in Myrtle Beach was selling." and I think about him quite often because as I ride around and see how blessed we've been to be in a market with all this growth that values have appreciated.
Mm-hmm. Significantly.
So the development stuff, I mean, I've done a little bit. Mm-hmm. Nothing like the rest of the guys probably you had on the show. Right. I never used much private money, and the banks told me no quite a few times. And
it's part of it, yeah.
So I've been kind of a casual investor, I guess you would say.
Yeah.
It's hard. I think it complemented my credibility in the appraisal business that I vote with my dollars too. So a lot of what I call pencil pushing appraisers that only have their home or outvaluing properties at $10 million or $20 million or $30 million and never feeling or understanding what it takes to do a development and or to buy a piece of property like that. Yeah. And so I think the little bit of development I've done has complemented my toolbox, if you will, of both consulting and appraising.
Yeah, I think that makes plenty of sense. So with that being said, the consulting arm is a huge focus of the business right now. And then maybe if you want to tie in maybe how Dave got, how you and Dave partnered to start Hucks Curry, but can you give an overview of kind of what the team is focused on modern day? So obviously the appraisal arm is still functioning. There's still appraisals being done, and that's a large part of the business. But it seemed like there's been a big push on the consulting arm for probably quite some time here, from site selection, obviously appraisal, but any other consulting and strategy along the way that you provide too. You have people looking to develop here. You have people looking for office space here. Maybe people looking to own their own business space. So can you give an overview of the consulting part to the business or Hucks Curry Advisors?
Well, I'll try. It's really trying to do unto others as you have them do unto you.
Yeah.
If I go and pay, and I actually did this a few months ago, it was an out-of-market property that someone asked me about being involved in.
Yeah.
And so I tried to find somebody in that market that had a similar resume to me to say, hey, I want you to treat this as like if you were doing it. What would you look for? And for 3 or 4 hours that I paid him for, it was well worth me trying to gain the insight and the knowledge and the experience that he has. So it really boils down to a lot of people will bring in a set of plans. They'll bring in a plat or whatever and say, hey, I'm looking at this. What do you think I ought to do? And of course, I don't wing it. I try to say, here's what I think would work, and here's the reason I think it would work.
Yeah.
And again, that's not appraising, but it's putting 1 and 1 together to equal 2, and hopefully you put 1 and 1 and you get 4.
Right.
So it's the consulting allows us to do that with the facts. And if you're dealing with that, and you're just minimizing risk and trying to have the right timing on a development or a future location. I tell people all the time, buying the land is the easiest part. It's the rest of the equation that gets into it.
Wow. So who are the types of businesses that are seeking you guys right now on the consulting side? And then what other services are there? Like kind of what's the step-by-step evolution for most teams from first meeting all the way through? Like what services I think are people, looking for you guys to help provide along the way, besides maybe site selection that falls under the consulting umbrella?
Well, I don't want to cross the line with any confidentiality.
Yeah, that's fair. Yeah. But in generality, yeah.
In generality, it's people seeking to make a real estate investment decision, and they just come and ask for our expertise, and whatever that is. If it's a restaurant, or office building, or subdivision, or it's just it varies.
Sure, that's fair. One thing I was thinking about during my prep that I wanted to ask you about, you of all people, you've seen every deed in the county change hands for the most part. Maybe you haven't, but you at least have them. How have you seen this market evolve over time? You were here for, obviously, like you said, savings and loan crisis, but then also this condo boom, not even just oceanfront, but also your Myrtle Woods or any other inland, kind of garden style condo boom. Then we had this COVID era, which led to a ton of growth for Myrtle Beach as well. And then this single family boom that we have right now. And then not as much volume as single family, but we have a new product too, build to rent, that's kind of popped up. So how have you kind of seen these different real estate cycles kind of percolate over your time? And how did you analyze those? Like, what was the feeling when you're doing all these appraisals? Do you have a good feeling that things are changing ahead of when they are because you have all of the data? Or like, how do you evaluate these market cycles that we experience here?
Well, it's all supply and demand.
Mm-hmm.
And the 2006, 7, 8, whatever you want to call the date. I actually think the market peaked in September of 2005, and people didn't realize the downturn until 2007 or 2008. But the valve stopped, or the valve closed for condominium development per se. We used to average 2,000 new condominiums a year in the local market.
Sold?
Yeah, sold. And since 2008, we've averaged 200.
Wow.
So if you think, what does a condominium serve? It serves oceanfront rental. The tourists that come, they don't know if it's a hotel or if you own it. It's condominium, it's a rental. And then likewise, you had apartments. You had condos at the places you were talking about, Magnolia, River Oaks,
World Tour,
all over. We're building condos to people who had some intention of having a second home or a getaway, but ultimately that became inventory into the rental market. And likewise, the tenants that moved into it didn't care if it was an apartment or a condominium. So when that valve closed in 2008, in 2018, I did some analysis and saw that there should be substantial pent-up demand for apartments and or build to rent. And so I did quite a bit of consulting on that and had the charts and graphs to prove it. And those developments at least went through some pretty good days of success. But like fundamental economics say, excessive profits breed ruinous competition. So we certainly have a lot of competition in the apartment market now, with over 4,000 units being added, where on a 20-year average is maybe 400. So there's challenges ahead with that market.
Think there are any challenges ahead in the single family market? I mean, there's quite a bit for sale. And there's a lot of new construction for sale too. What's your opinion there?
Well, I guess in summary, again, consulting, not necessarily appraising.
That's right.
Back in 2005, I had all those charts and graphs, and everything just looked like, man, we're in the right place. This is just going to be boom, boom, boom. Build it and they'll come. So I would go to seminars, classes, whatever, and they talk about population growth and the demand for housing to be related to that. Well, that all made sense, but Myrtle Beach was different. So we were building, like I say, 2,000 condominiums a year and 4,000 single-family houses, and they kept selling. Well, boom, the correction in the market came, and so a lot of people suffered a lot of losses, including myself, because they were the wrong buyers. They were speculators and investors, and so that was a good correction. So what's been happening lately is we've had more of the right buyers, and the right buyers were the ones that didn't require 100% loans and interest only. They could pay cash and or get a moderate mortgage loan to do it. So everything's been pretty much in balance after the correction, but it took, we had excessive supply of probably 6,000, 7,000, 8,000 units based on population trends. So when I say that, I mean, for population to grow, it needs houses to move into and or apartments. And so we had excessive compared to the population that grew here, 7,000, 8,000 units on the market. And so the valve closed off on even single family permits down to a low of less than 1,000 a year in 2010, 2011, 2012, because there wasn't even any need to buy a new house when you could buy an existing house for 50 to 70 cents on the dollar because the market was that depressed. And then as demand depleted supply, you started seeing residential subdivisions activity begin again, but it was at depressed prices, discounted prices, I should say. So we had subdivisions at lots that had sold for $100,000 selling for $15,000 and $20,000.
Wow.
So the builders bought up those lots and started building houses and were able to get momentum going again because of very depressed prices. The builders made a profit, but they mainly, a substantial amount of the profit was because they had such low basis in the residential lots. And by 2015, the supply of those lots had been used up or built on, and so developers started putting in streets and water and sewer and building new subdivisions. So the market kind of got back into equilibrium in 15 or so. And so today, the hardest thing to do, if you have a formula that you're basing your analysis off, is to project what the population growth is. And there's all kind of sources that you can find, but certainly Myrtle Beach, Horry County, the Grand Strand is growing. The question is how much is it growing? And the growth is net growth. Net growth is what matters, and that's newcomers plus births minus deaths or out-migration. So who knows what the exact growth is? County forecasts are in the 8 to 10,000, maybe 12,000. We have had through 6 months of this year 4,000 single-family permits in Horry County, and so annualized that would equate to 8,000 at 2.3 people per household. That's in the 18 to 20,000 population capacity that those permits will create. But I've never seen a forecast or a calculation or a data source that says we have 18,000 people moving to Horry County. So my yellow flag's up to say
there's a surplus of supply.
There could easily be more units built than there are people moving here. But I was in a meeting yesterday and we were talking about that. There are so many untracked people living in this area that may or may not have a local driver's license, right. May or may not have a green card. So who knows what population is growing at. But I know that the last few years, everybody's enjoyed a lot of success. And my formulas support the reason that the market had been more in balance than it was back in 2005 when the correction occurred. Right. So we will be monitoring that relationship as days go on and, hopefully be able to be informed ourselves, but also inform clients of these canary signs.
I think that's fair. One thing your summarization kind of our real estate market over the last few decades there brought to mind is how difficult was it doing appraisals, bank orders and appraisal during those crazy cycles where things are trading 30-40% below, cost to rebuild? Is it tough because there are no comps to how what is the appraiser's life like during those cycles? Because they're probably maybe feeling some pressure because the bank may now just started back lending on purchases. Like, how do you, as an appraiser, do a fair job when there are no transactions in these, repressed demand markets, or where there's a wild reduction in what things are trading at? Like, how is that as an appraiser if there are no comps or things are just kind of falling out of the sky? How's that work?
As appraisers, what we're supposed to do is not give our opinion, but give our opinion of what the market thinks. And so in those downtimes, we would interview people and say, hey, what do you think about this? And he said, I wouldn't have that for anything. Or hey, if I buy it, it's going to be 25 cents on the dollar. Well, the last comp might show 75 cents on the dollar.
Right.
So it was anybody's guess, quite frankly, as to what something was worth.
Wow.
Lenders started requiring what they called a fair value, which is a modification of market value, which would require a reasonable marketing time of, say, 6 months or less.
Mm-hmm.
So you would have to discount, and so to get someone to buy within 6 months. It wasn't that there weren't buyers. There were buyers, but there were sellers willing to sell for less than ever before.
Wow.
I mean, it's pennies on the dollar.
Wow.
And so it was just an unusual situation that I'm not saying it won't happen again.
Sure.
But it was just an appraiser. Our accuracy rate during times like that is not good. In a typical equilibrium market, I'd like to say if you get two equally qualified appraisers, which is, it can happen, doesn't happen.
Easier said than done, maybe.
Easier said than done. And then you get equal experience in the market, the appraised value should be within 5 to 10%. But when you get into a market to where you don't have equilibrium, you got more supply than demand, the accuracy of appraisals is very, very difficult.
Well, I would imagine. What was the reverse of it like? You touched on it for a second, but what about COVID days here? I mean, you're getting an appraisal, and by the time they're closing the loan, the house may be worth a little bit more after those 30 or 45 days. Yeah. So what was the challenges then?
When you started getting multiple offers and sales above listing price, that's an appraiser's nightmare. Because again, we've got eyes looking over us as to, well, you have to put the history of the property in the appraisal now. And so we say it was listed for $875, but the sales price is $925. Well, how can it be worth more than it was listed for?
Right.
But again, so we have to rely on comparable sales. We're talking residential now. And so there were many appraisals that we came up short on.
Just because there was not enough recent sale history supporting the new price?
Yeah.
Wow.
And experience-wise, 43 years I've been in the business, that's not always bad for the buyer to say that they paid above appraised value, because there's a trend taking place usually that will likely continue for some time. So some of the best buys I've ever made, I paid above appraised value by somebody else.
Right.
Just because I felt like the momentum was heading that way, and so what the last property sold for. I wasn't into selling it the next day or the next week. I had more of a holding period. So paying over appraised value is not always bad. It's according to what end of the cycle you're in.
Right. I want to talk about some deal stories because you've worked on quite a few great assets and great projects in town, and I would like to hear some of your favorite deals. But wrapping up the appraisal piece, right now, what do you make of this market on the appraisal side? Is it difficult? Because right now we have kind of more and more supply building up, maybe a fall line from, obviously, certainly a fall from all of those over asking prices and bidding wars. Is it tough right now in the appraisal world because prices seem like almost hypersensitive? People are a little maybe even slower around the election, but what is it like right now for the team? Is it?
I think you got to help me a little bit. Are you talking residential?
Residential. Sorry. Residential. Yeah.
It's, to be honest, I'd say it's fairly, I don't want to
straightforward.
Straightforward now, okay. Because there's ample comps.
Mm-hmm.
We see spec building going on, which, if you think about it, why does somebody build something spec? It's because they think they can sell it for a profit.
Yeah.
We've had eras when there were no spec houses, and that was because things were selling below cost. But today, and what is cost today?
It's a good point too.
Every day I hear somebody going over budget on something. So if you've got an existing product that's built and it meets your needs, why not pay good money for it?
Yeah.
But most, I've told this a couple of times in the last week, in a down economy or in a normal economy for houses, they usually suffer three forms of depreciation. That's physical, functional, and external. All of those take away from value or cost. Mm-hmm. Well, in a good market, depreciation minimizes. In other words, the old theory, you don't want to be the most expensive house in a neighborhood. Mm-hmm. Well, the reason they're saying that could be external obsolescence. Or maybe the house is overbuilt with too many bedrooms, too many bathrooms. That's functional. And then physical is just normal wear and tear. Mm-hmm. Well, when the market is hot, people will buy that big house because say, hey, I couldn't build it for that. Mm-hmm. And so you just, overall, we have a limited supply of existing homes for sale. And that's causing a lot of appreciation.
Right. Yeah.
And until, it's just like the inverse happened with the banks. When they started selling foreclosures just to get them off the book, it didn't matter what your house was next door, what you had in it, you were going to be a victim of what the
new comps
were. So the same thing's happening here. Is every day there seems to be a higher comp in the upper end market. Now the $300,000, $400,000 price range is a little bit different. There's plenty of supply of that. But evidently builders are still making profits and they're still buying land to build more. So
yeah, I think that's a good summary. Transitioning and kind of slowly wrapping up, but what are some of your favorite deal stories? This could be a deal that you were in on or a deal you appraised or maybe in the consulting side. Like I said, a lot of people wanted me to have you on the show, so I heard some requests along the way. But you worked on North Beach Towers and Plantation residential around it. Someone mentioned Family Kingdom was a good deal that may be good to hear about. I don't know how many developments you probably worked hand in hand with Burroughs and Chapin on, but maybe those could be good to talk about. But where do you want to start if we want to chat about a couple? What was some significant or maybe challenging projects you worked on or were heavily involved in along the way in the county here?
Well, clearly, North Beach was one of the favorites. Mm-hmm. It was a family that had a campground there that had been for years. I didn't really know them, but a local tax attorney called me and said that he had a family that had been living out of that property through the years, and the family was getting larger, but the income wasn't getting larger. And so he asked if I thought that it could be sold.
Something.
Yeah. And I said, sure. And so I made 3 phone calls, and I had 2 offers on it. And the ultimate buyer was Sam Scalise, who said at the time, it's not too much if you say it fast. 60 million. So he said it about twice, and I knew I had a good buyer on the line for 60 million. The 60 acres, $60 million. And so
beachfront, if anyone hasn't seen the site, obviously. It's a great piece of property.
Yeah, it was an oceanfront campground with, I don't know, it probably had 400 or 500 feet of frontage, but quite a bit of depth.
And as disclaimer, who you're going to get to, David, at some point, we had on the show last year and documented the tower portion, but just
correct,
just as a footnote.
So when Sam contracted to buy it, then he said, well, buddy, what am I going to do with all that property? I said, I know who will buy the oceanfront. And so I went to David Stradinger, and David contracted to buy the oceanfront parcel. And then Sam was building in Garden City and Surfside, single-family houses. In fact, I helped him with one of his first developments back in the early 90s. He built 10 spec houses at one time on the oceanfront.
All with pools, right? Or am I getting that wrong? That was the next. Okay.
The first one, he was actually thinking about building townhouses.
Okay.
And I've never been a huge fan of townhouses in this market. So I discouraged him from the townhouses and suggested that he do flag-shaped lots, therefore giving each house an ocean view and building one common pool, which was one of the first developments with a pool for single-family houses. Back then, early 90s, the only pools were at the hotels.
Oh, wow.
Or the campgrounds. But so he laid that development out, built 10 houses, and quickly sold those and went on to do about 4 or 5 of those other projects like that in Surfside. And then migrated into just doing what I'll call one-off houses with private pools. And the pool adds to rental income 20, 30, 40%. I mean, rule of thumb on a residential house, beach house, back in the day, I wouldn't attest to it being today, but you could pay for the pool in 2 years. And so pools became a real big trend. And so anyway, Sam had about run out of land in Garden City and Surfside. So he was eager to hunker down, if you will, at North Beach. And so I went to Destin, Florida, Seaside, watercolors, Alley Beach, took pictures of the development taken down there, fed that data back to Sam, and he modeled his development after those Gulf Coast projects. And I had done all the work at Kingston Plantation in the 80s because the bank I worked for did what you call forward lending. They would sell the developer a block of $20-30 million worth of loans at a fixed interest rate, agreed upon interest rate, and then when they would sell the units at Kingston, they had financing already lined up. And so I had been through the development of Kingston doing appraisals, and I told Sam that North Beach could be the closest thing to a Kingston that there was, which indirectly creates its own market. It's not what's a half a mile down the street that sells for $600. It's what sells inside for $800, and that difference a lot of times is profit from locational advantages. So anyway, then Stradinger had the contract on the oceanfront, and so started consulting with him on layouts of the units at North Beach, and even the design. I found a project down in Florida that had a very, very similar design. In addition to, I had been to Atlantis and seen the bridge, as they call it. And so the combination of those designs and elements is, you know, I don't try to be boastful, but it was interesting to see it all unfold. And, you know, I was involved in the early part. And then when the struggle started, I certainly tried to help with advice on how to dig out, because, as they all say, timing was not a good thing for North Beach.
Right.
And so, but the quality of the project is still there. I was up there the other day, and it really looks nice, and, you know, it's a good development. So I'm proud of being involved in that.
Absolutely. It's an iconic project. How did the residential, how did the homes shake out?
Actually, Sam got so upset with me one time, he just said, "Buddy, I won't even say what he said, but because he was
Didn't he say something like, "I'm going to kill you for selling me this land," or something?
Close to it. Yeah, very
clean
close.
version.
That's the clean version.
Yeah.
I won't say. I said, "Sam, you just need to get a product to get momentum going." And he said, "What do you mean?" I said, "You need to start something into ones." So he built a little 2-bedroom, 2-bath, and started it at $199, and today I think those units are over 400. So
wow.
But he went from $199 to $379 to $550 to on and on and on, to ultimately not the same product, but over $1 million for houses in there in the early 2010, 10, 12, 15 through there.
Wow.
But North Beach, and that's what's always happened here at the beach. The good quality projects will endure the downturns.
You just got to hang around it long enough to.
Well, you give somebody 4 walls, they'll usually buy it about any time. When you cut them back to what I call 2 walls, which is what a townhouse is, you got a front wall and a back wall, and your common walls are the others. 4 walls always sell better than 2 or 3 walls.
Condos included in 2 or 3 walls?
Yeah.
Wow. Interesting. What's next? What other project do you think was significant? I mean, that's a great story.
Family Kingdom was a challenge.
I don't know too much of it. I know a little bit. So start wherever you want, like, on that.
Well, it's kind of ironic because in the 1950s, my father and my uncle owned a house right beside Family Kingdom.
Oh, wow.
And I can barely remember the visit to that, but anyway. And then when I was in college for 3 years, I managed a water slide right across the street from the big roller coaster, we always called it.
Wow.
That's what Family Kingdom was. It was the home of the Swamp Fox roller coaster that's been there since, I don't know, the 60s or 70s. But that family was the Ammons family, and they were a family that started with Sea Mist Resort, which was over 800 units in a hotel development. That ironically, when I worked at the water slide, I was actually the assistant manager, so I was involved in management duties. One of our biggest customers was Sea Mist Resort, bringing bus loads of people to ride the water slide. And I remember several occasions having to take some of those people that came on the bus back to the Sea Mist with busted noses or cut lips from getting hurt on the water slide.
Oh, wow.
But anyway, Mr. Ammons was really an entrepreneur, and so he decided to build his own water slide at Sea Mist eventually. But in the meantime, he had Family Kingdom that was, if you stayed at the Sea Mist Resort, he'd give you a coupon book to ride the rides at Family Kingdom. They had a roller coaster, merry-go-rounds, go-karts, it was, I can't remember, but let's just say it's around 10 acres of land that spanned from Highway 17 to the ocean. And they had a water slide on the ocean front. So when they sold the hotel, the 800-unit hotel, they no longer needed the Family Kingdom. And so that was right in the middle of COVID. We had contracts that fell through, and then ultimately closed on that, I guess, in 2021 or 2022.
Wow.
But it was a very challenging property. It used to be, if you were near the ocean, then the simple solution was to build condominiums. Well, that hadn't been the case for the last almost 20 years.
Right.
And so oceanfront's gotten a lot more challenging with development potential.
We've seen some new hotels going up, oceanfront. Yeah.
Yeah, and I've been somewhat involved, certainly in the consulting and in those, but not really the appraisals like used to. But
right.
Myrtle Beach has got a very depleted inventory of quality resorts.
No doubt.
And so these franchises are kind of a new wave for Myrtle Beach, big picture, but they've really been a positive addition to the market, which is, other than a couple of franchise motels and timeshare projects, there really hadn't been much oceanfront development.
Right. I've got a couple questions to finish with, the ones we kind of chatted about before we started rolling, but give you a chance. Is there any other project do you think that was significant in your career, or any other story you wanted to be able to tell? I don't want to cut you short on those.
Well, Prince Creek was a development that has a lot of sentimental, because when I moved here in 84, my uncle had bought a tract of land really in the middle of Prince Creek.
Wow.
It was only 20 acres, but he subdivided it into 20 lots, and it fronted on Collins Creek. And he helped finance the lot for me to be able to move down here and bring my family and start a new career. And Prince Creek was 2,700 acres that surrounded it. And so when I moved down here, I'm just an old country boy. I like to hunt. I actually was in a hunting club, and we hunted Prince Creek to 2,700 acres. And I killed turkeys there and ducks there and deer. And then I got a chance to be on the development team with it, with George Taylor, who I mentioned was partners with Leonard Call Taylor.
So who owned that land originally?
Canal.
Okay.
With Ponderosa Group having an interest in it too, which I've done a lot of work with them over the years. But anyway, George had developed part of Hilton Head. He was actually on the original development team at Sea Pines, And then, like I said, he was involved in Kingston and Ocean Creek. And then he became involved in Litchfield by the Sea after they had their challenges. So he had a good connection with Canal, Craig Wall's family, and they set out to develop 2,700 acres. And George used me for consulting. And I had started tracking data back then, and so absorption estimates and lot values and all that became part of the development process. And so it was ironic, again, that I moved there in 84, and by 2004, let's say, it's 80% developed. And now to go out there, even the commercial property is selling for $1 million an acre.
Wow.
And that was, it's just all been that growth that's occurred. And frankly, it's a nice development. It was well done. I had several inputs on it that they needed to build a bridge to connect the Prince George East with the Prince George West, and they took that advice and connected it, and that was a positive addition. And then I told them they needed access out to Highway 17, and they built what's called Tournament Boulevard that comes off back to 17. And
it's a nice development in there too.
Yep.
Nice product back there.
Yeah. So Myrtle's Inlet's grown up, and that's where I brought my family in 84, and have been living down on the south end my entire time, but working in Myrtle Beach for over 34 years, and now my headquarters is more down here in Myrtle's Inlet.
Mm-hmm. Yeah, it's nice down here. Yeah, in wrapping up, and if there's anything else you want to close with, we can certainly get to it as well. But what is the team focused on now? We chatted a little bit or a lot about it earlier in the episode. Kind of, there's these two companies. Obviously, they work hand in hand in some regard. But so you have the appraisal, and then Hucks Curry Advisors, the consulting arm. What is your team focused on now? Like, what's the priority for this year and then next year, just across both businesses?
I think we've got separation from the appraisal business. Mm-hmm. It has its own set of files and same different people, but with Hucks Curry Advisors, we're tracking data, we're selling data, we keep up with every closing in 4 different counties: Horry, Georgetown, Brunswick, and Florence County. And that's kind of our core area that we cover. And so my goal and my mission statement's always been to help others make informed decisions with good data. So
right.
We're still trying to do that, and we'll continue to do that. Technology's changing a lot. We're refining our skills with GIS presentations, mapping programs. We've got all
there's cell phone, which is pretty neat.
Yeah, we have a software that tracks cell phones and can help businesses. I had breakfast or lunch the other day with a guy, and I asked him, I said, "What's your average ticket?" He said, "Oh, let me check." He said, $14.23. And I pulled him a little sheet, and I said, "So you grossing about $1.5 million?" He said, "How'd you know that?" I said, "Because I know you had 110,000 visitors to your business last year." He said, "Okay, that's
sure." That opened his eyes. Yeah.
So he's considering an expansion. And so from knowing how many people he has with the cell phone data, we know the home locations of where those people are coming from. We know the roads that they take to get there. So we think we can help him select a new location to capture additional market, not to mention dilute some of that demand on that property that has limited capacity. So it's exciting. Big data's here, and we're just trying to learn how to use that data to help people make informed decisions. And nothing's more pleasing to me to help a client when he comes with an idea or has a piece of property and then look back at it 5 years, 10 years, 15, 20 years from now and know that you helped that person be successful in their real estate needs at the time.
Absolutely. Where can people interact with the data or purchase it in contact? I know there's a page on the website that you guys sell the quarterly newsletter, I believe. But where else can people access that or reach out to you to?
It's efhucks.com and then huckscurryadvisors.com.
Perfect. All right. So last couple, where do you see touched it a little bit there, but where do you see the future of the company? Or this could be your personal investment, this could be on the consulting or appraisal, but is there any service, asset class, or market that you haven't been in before that you would like to be in? The answer doesn't have to be yes, but is there anything you haven't done that you think you would like to complete as you continue to work?
I went down a crossroad about 20-something years ago where I took some business valuation classes. And I almost pursued that as a complementary business to the appraisal business. But I never did do that, but I took a seminar last Friday on it. I'm still intrigued with it. So we make it into business valuation because you can really help a lot of people with that from a estate planning standpoint. And I like helping clients, and you know, it's not all about money, but all we have to sell is time. Mm-hmm. And I'd like to give somebody, if I charge them $400, I'd like to think they got $40,000 worth of value out of it.
It's a good spread. Yeah.
So I want to be in a value add service business, and appraising is not really that anymore. Yeah. It is something that really
transactional in a way.
Nobody really wants. So I've been selling for 43 years something that people really don't want in appraisals.
Right.
But they have to have it. And I couldn't imagine if I had a car lot and was selling cars to people who really, really wanted it. And I've never really tried to be a slick salesman.
Sure.
But I've been made a reasonable living in the appraisal business off of selling something that people really didn't want.
It's fair. Last question for you, unless you had anything else you wanted to chat about, but who do you think, and you probably mentioned a handful of their names, but who do you think helped you the most along the way in your real estate career, in your appraisal business, in the consulting business? Who do you think, mentors, peers, partners, who do you think helped you learn a lot in the business?
So we're talking about the appraisal business. It all started, I knew when I was a teenager that I wanted to do appraisals, and my dad did them to some degree, but he introduced me to one of his mentors, and he was an older gentleman at the time, retired from the government, but he said, take all your classes while you're young. And so I did, and I really I never wanted to be at a table with other professionals in my business that I felt like they had taken a class that I hadn't, and that they had some professional knowledge or academic knowledge that was better than what I had been exposed to. So I always strive to take the best classes, and I'd have to give credit to him for that. And then through the years, I had because I'm pretty much self-taught, other than the academic classes I've taken. I had a brief time where I had an MAI boss that was out of Maryland, but he only came twice to the beach in 5 years while I ran the company down here. So he didn't hurt me, but he really didn't help me a lot either. So I'm kind of from the school of hard knocks, self-taught. And but I did have a mentor in Florence, South Carolina, who was an MAI there, and then one in Charleston. And they were important in helping me establish the appraisal business. And then from the consulting standpoint, again, it's just kind of school of hard knocks. I just kind of migrated into that. There's certainly some regional and national companies that have a lot more tricks up their sleeve than I do. But when it comes to Horry County and the Grand Strand, I think we've got the data set and the knowledge and experience that I'm just thankful to have been really learned a lot from the local people around here.
Right.
I've been exposed to so many developers that have been successful that it's pretty good when you can get paid to learn.
Yeah, not a bad deal. Yeah.
Right.
Yeah. The buddy, I think that's a good place to wrap. Is there any part of your story, your business that we missed or you wanted to finish with?
No, I think you covered it good.
I think we did too. Well, thanks for coming on the show. Thanks for hosting.
Thank you.
Yes, sir.